Hi everyone, I'm Ken from CryptoTradingKS and the CTKS Method. If you're new, a very warm welcome and welcome back CTKS family. My goal is to assist you in becoming more of a financial and emotional blessing to yourself and those you love through positive excellence. If you like the content, please smash that like button and don't forget to subscribe. We have one of the best communities on YouTube. We look forward to welcoming you into our global family. There are a lot of free resources on CTKSMethod.org. The link is in the description of this video. Let's see where the markets are going in the next 24 hours. And let's run the numbers. To get prepared for this week, just bear in mind that on Thursday, Aussie time, the federal funds rate, the FOMC statement and press conference are coming out. That will cause turbulence inside the markets. Friday is a pretty high impact day as well, so just bear this in mind. President Trump has been calling for rate cuts, but the probability of a rate cut is currently 0.5%. There's a 99.5% probability that rates will remain unchanged. Many influencers inside the crypto space will look at Bitcoin's chart in order to determine where Bitcoin is going. This may sound like a really good idea. After all, how could you figure out where Bitcoin is going if you don't look at the Bitcoin chart? But I'm here to tell you that is actually the wrong way of doing things. If you want the best possible way to understand where Bitcoin could be going in the next 24 hours, you need to do a very systematic and scientific approach, and anybody can learn it. The first thing is, the best way that we can look at Bitcoin's chart by just looking at Bitcoin's chart is structurally. Now, how do we look structurally at levels? The first thing is that we have to mark up all of price history. Level 1 and Level 2 standards are the best way to mark up any resistance levels and support levels. This is literally the world's most powerful smart money buy and sell level detection system. Now, what does this actually mean at the current time? A lot of people draw to recent indicative price, and that just means they look at the price here and they just draw a line to somehow meet it. So they would say something like this: oh, Bitcoin is under support. It's at support. It's supported. It is not. The actual structural levels are these dotted horizontal lines, and thicker means stronger. I'll just put on some values for you. What we're seeing here is the current price of Bitcoin is 104,791. The bull market case is to get above 106,425 and to keep on going. But there are a lot of sellers here, and the sellers have been encountered before and push Bitcoin's price down. The negative case is that we come down into this 102,298, and we've been down here before and we got very quickly reflected back. Structure is absolutely everything. These are not randomly drawn lines. These are the best possible resistance and best possible support lines that you could ever get, and you can learn to do it yourself. I was mentioning before that we can't just look at Bitcoin's chart, we also need to look at total. And if we look at total currently, we can see it's in a bit of a negative downtrend. But unless we know what the structure is doing, this is a pointless analysis. It's all about structure. The first thing that we need to do is look structurally. Momentum without structure is pretty much useless. You can see right here at this $3.53 trillion mark, we had a level of structural support. It's support when price is above, it's resistance when price is below. Now, what is it right now? It is resistance. So this 3.53 trillion is really quite important. If we see a negative structural attraction down to this 3.48 trillion, we would anticipate Bitcoin and of course the entirety of the crypto market to be coming down. That is the bearish case, but price is always moving in a wave, and price moves to a degree that it tends to shake people out of where they think it's going. Now, this happens all the time, so you need three-dimensional thinking. First of all, you need wave-based thinking to understand the price is always going up and coming down, but it goes up and comes down in relationship to structure. So those waves, they're not random, they're structurally biased and structurally based. If we lose this 3.53 trillion in the crypto market, the next level of support is around this 3.48, and that is quite good. That's quite strong. At the moment, because we're broken underneath this $3.53 trillion mark, it's favoring NSA or non-negative structural attraction down to the 3.48. Just keep your eyes on this level. I'm going to show you how you can look through the charts. Looking through the charts is really important. Just to help you out a little bit, you can take the date and price range, just pop it on here and look backwards. So this is about 2 days, 17 hours, or say 2 days, 18 hours away. You might say, Ken, what is 2 days and 18 hours away? This level of support where it hits structurally, because we're looking towards the right. We want to see if this level of structure is or could be significant. Okay, let's do exactly the same thing on Bitcoin. 2 days, 17 hours. Okay, it's around here, just around here. So what does it mean? If total crypto market cap comes down into this structural support, where do we anticipate that Bitcoin will get its structural support? Between 103,373 and 102,691. That's how you read through charts, but there's a lot more to it. When I mention there's a lot more to it, you need to assess the momentum and direction structurally, especially of row 1 and row 2 all the way through to row 7 of the cheat sheet. I'm going to just quickly take you into the VIX and junk bonds, and it will give you a pretty eye-opening thing when it comes to Bitcoin. Now here, we're looking at the VIX, which is row 1. Row 1 is a very good idea if risk on or risk off is coming into the market. You can see here, this blue line is Bitcoin, and you can basically see there's what's called a directional correlation. But this directional correlation isn't a direct one, it's an inverted one. So inverse directional correlation with the VIX and Bitcoin. Now, what does this mean for you? If you're new to this kind of analysis, well done. You've absolutely found the best place that you can possibly find to learn how the markets actually work. This is not story-based analysis. These are the facts. When you look at the VIX, when the VIX comes up, what does Bitcoin do? It goes down. Now, I'll just flip that around so you can see a little bit more clearly. So as the VIX is coming up, we anticipate that Bitcoin will come down. And as the VIX comes down, we anticipate that Bitcoin will come up. I'll just re-invert it again. A lot of people have difficulty just learning how to read inverse charts, but when you get the hang of it, it will become second nature. Okay, good one. Let's go across to junk bonds and see what junk bonds, what's the relationship there? Well, you can see it's pretty directional. We've not inverted the chart. The low numbers are on the bottom and the high numbers are on the top. This is a normal chart. And of course, what are we seeing here? That junk bonds is going up. Now, what we need to do is look in here inside this box structurally to determine if junk bonds is going to keep going. Now, why do we care? Aren't we just looking at Bitcoin? You are just looking at Bitcoin. This blue line, look at its gravitational pull in respect to junk bonds. Unfortunately, when people get into financial markets, they will look at Bitcoin and Bitcoin only, thinking that somehow Bitcoin is disconnected from the market. Wrong. It is not. What we're going to do is to zoom into this area and look from a structural perspective. What we can see immediately is junk bonds has been just delayed from breaking out on the daily basis because of this level of structure just north of 96.77. We have a structural support just a little bit under 96.53. Now, what does this mean? We've already had a cut over here, so there's positive momentum inside junk bonds. If it continues up, the next level of structure is around that 97.03 mark. So in terms of junk bonds, which is the inversion of the VIX and also follows Bitcoin, we anticipate upward structural momentum in the next 24 hours. That doesn't mean 24 hours is a long period of time. In the next 5 or 6 or even 8 hours, we could get negative price momentum. But it's when the US market opens that all the liquidity comes in. We did have a bit of a rejection here, as shown by this wick inside junk bonds. If this is the first time you've looked at junk bonds and the VIX to understand where Bitcoin is going, just pop in the comments VIX and junk. The more of those comments that I can see, I'll just reach out and do other videos to help consolidate your knowledge. But I won't know unless you tell me. Okay, let's do a bit of a bonus one. Here we're looking at the DXY on a daily basis since the start of January 2025. What do we notice here? Well, basically we've got a directional correlation between Bitcoin, which is the blue line, and the candlestick chart, which is of course the DXY. Are the big numbers up the top? Oh, no, they're really small. What about down here? Oh, they're really big. This is an inverted chart. Now I can tell. Easy peasy. What about if we invert it, or uninvert it, more the case? What we can see is when the DXY goes up, that throws negative price momentum into the crypto space, but it also does it in the stock market. And what do we see here? As the DXY is coming down, what's happening to Bitcoin? It is going up. This is all about stacking probabilities. If you're new to stacking probabilities, just put the comment stacking probabilities, and I'll focus on helping you with additional content. One of the reasons that we need to predict where the tops and bottoms are in terms of the VIX and the DXY and junk bonds, we haven't even covered any of these other things, and there's a lot to cover. In fact, there are a ton of things that you need to be able to understand where the tops and bottoms are. But for now, let's just talk in terms of the VIX and junk bonds. If you can determine where the top of the VIX is or the bottom of the VIX is, that has massive consequences for your investments and trades. For example, the top of the VIX would be the bottom of the stock market and the crypto market. The bottom of the VIX would be the top of the stock market and the crypto market. It's pretty damn important, and you can see, that the VIX and junk bonds, they move in opposite directions. So the top of junk bonds signifies that there's too much risk inside the market and the markets will sell down. This is all about stacking probabilities. Unfortunately, people are not taught to stack probabilities. They're taught something called retail trade perfection. And you can see it all over YouTube, all over social media. Oh, this always works. This is the single best thing. It just never fails. Oh, what crap. When you think about it, price is always moving in a wave. How can it always work? Except for structure. Structure definitely always works. But when we're talking about these things, for example, the movement of the VIX, yes, it is structurally based, but it's impacted by exogenous events, such as presidential elections, new policy changes, the Fed funds rate. So you have to understand how one thing impacts another thing, impacts another thing, impacts another thing. You can read the future, but you have to understand it's a game of probabilities. And reading the future is not a certainty. Inside the Profiting course, I shared this template. This is about row 1. Row 1, we've only looked at the VIX, but there are a lot of other things that we need to look at. Inside the course, I help you to understand how to look at all these things very, very quickly. One thing that we know, and I've inverted Bitcoin's price. You can see it's currently 105,124. The big number is on the bottom, the little number is on the top. This is an inverted chart. And you can see the VIX and Bitcoin, they're hanging out together. The 10-year, the 2-year, the DXY, dollar yen, and oil. This is why it is not academic to stack probabilities. A lot of people will throw their entire net worth into a crypto project or indeed into Bitcoin and simply not understand how to stack probabilities. You work very hard for that money. The least you can do is work hard to understand the rules of financial markets. A lot of people say, I just can't figure out why I'm not consistently profitable. Can you read through charts? Do you know the structural levels? Do you understand structural direction, structural momentum? Do you know the rules of the markets? Do you have a process to look through each and every day before you place your trades or investments? Most people will answer no. And they are the same people that basically say, I just can't figure out why it's not working. Unfortunately, it gets much worse than that. RTP, or retail trade perfection, is a mind virus. It causes you to lose money. That mind virus is all about certainty. People want certainty because they don't know what they're doing. If you don't know what you're doing, you must learn to know what to look for. Learning is definitely your earning, and different people will teach you different things based on their experience and based on their expertise. Being degree qualified in finance and having taught first and second year statistics at university, one of the things that I've seen, the majority of the influencers out in the crypto space have no real financial background. And all of the indicators that you put on for technical analysis, such as moving averages, Bollinger Bands, RSIs, you name it, they are all statistical measures. Now, what does this mean? Statistical measures have certain benefits and certain problems. You must be able to stack probabilities. Now, what have we seen with the VIX and junk bonds, and how can we relate it to Bitcoin? We know that junk bonds is at a level of structural support. It's just done a cut over. It's exhibiting upward price momentum. So we could get a little bit of a sell-off in the first part of the day before the US markets open, and we may come down and indeed tap this 103.373 or 102.691. But it really depends on what the VIX and the DXY and junk do during the day. The best things that we can look at are the VIX futures and the DXY. That will give us an insight into what junk is doing, and therefore, by definition, will help us to understand what Bitcoin could be doing. This is how you need to approach financial markets, and nobody teaches this except here, and that's what makes us so different. The other thing to note is these CTKS levels, also called Stanfield levels, are the world's only leading indicator of price. You already know where the structure is. These are where the sellers are hanging out. These are where the buyers are hanging out, and you have exact figures. What you need to do in between is to stack probabilities, understand directional, structural momentum. There are so many rules in the crypto space, and one of them is no alt can escape Bitcoin's gravitational pull. This blue line is Bitcoin's directional momentum. This white line here is Bitcoin's percentage price change. What you can see, as Bitcoin comes down, all of the alts are dragged along with it. We have what's called an upper bank and a lower bank. Bonk and Whiff are currently hanging out on the lower bank. Litecoin, BNB, and Bitcoin Cash, as well as ADA and XRP, are up there on the upper bank. What is the difference between these two things? Every single alt is impacted by Bitcoin's movement. If Bitcoin comes down, the alts are coming down. You can see it right now. Look at that. The alts are coming down. But upper bank just suppress the negative price momentum, and lower bank overextend the negative. Therefore, if you do not know where Bitcoin is going, you don't know where your projects are going either. And the only way to know where Bitcoin is going is to look through the cheat sheet and assess structural momentum and direction. Yes, it involves a little bit of hard work, but after all, you worked hard for that money. And nothing is accomplished in this world without hard work. Ask any millionaire, any billionaire, do they work hard? The answer is unequivocally yes. Ask any person who doesn't have financial resources, do you work hard? They'll say, yeah, at relaxing. I work very hard watching Netflix. And they'll say something like this, I've been told I need to spend money to make money. I spent all my money, I just don't understand what happened. What did you spend it on? Oh, I spent it on fancy cars and good watches and really nice clothes because I wanted to look the part. You know, fake it until you make it. Stop doing that. The question is, what do you do? Just obey rule number 1. Only knowledge creates profit. This is the same with anything in life. If you want to play a game of tennis, hey, you better have the knowledge of how to play tennis. Of course, you need knowledge and experience. But you need the knowledge first, or you're just going to hit the ball over the wrong net. Or you're going to just whack it straight up and say, I don't know why I can't score a point. This game of tennis must be rigged. Yeah, not really. It's just the knowledge that you need. If you get the knowledge, you level the playing field, especially inside the crypto market, which is unequivocally the best market of all financial markets. Your learning is definitely your earning, and that goes with everything. Look at all the highest paid professions in the world. Do they have big knowledge requirements? Yes, they do, because the knowledge creates the profit. A lot of people just say, I'm just going to treat the financial markets like a casino. Congratulations, put it all on red and you will lose long term. You don't want to do that. You just want to get the knowledge. Professional gamblers don't gamble. They run the numbers, they do the statistics, they understand what they're doing. In fact, the whole field of statistics was developed due to an analysis of gambling, believe it or not. Sacré-cœur, Ken, could it be true that stats is all about gambling? Yeah, it is. The term mathematical statistics designates the mathematical theories of probabilities and statistical inference, which was developed using probability theory, whose initial results found in the 17th and 18th century, especially in games of chance, gambling. So doth say Wikipedia. I'm literally teaching you how to count cards. When we look at the profiting from CTKS method structure, week 1 is all about getting your mindset correct. If you're going to sit at the table, you better have your mindset in the game. Week number 2 is literally about counting the cards that the other players will throw down on the poker table. Week 3 is playing the hands to show you what you can do. Week 4 is to understand how to keep your winnings. It's one thing to make money, it's another thing to keep it. If you're interested in getting into the profiting from CTKS method structure, reach out to me directly by direct message on X or LinkedIn. You can directly message me on X by reaching out to @StanfieldKen, which has 2 Ds. You can see it here. And I've just recently changed my profile, so I'm under review. Ooh, naughty Ken. This is an amazing thing because if you have the knowledge, you will get the rewards. But just always understand that the markets reward knowledge and penalize the lack of it. If you're gambling like a gambler, you're in for the thrill of it and you will get a thrill, all right, but it's not what you want. Instead, you want to build something great. You want to build your life so it continues to go upwards and upwards, so you can be more of a financial and emotional blessing to yourself and those you love. Your success is my mission. Please let me know in the comments what other topics you would like me to cover off. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.